Hey everyone, my name is Beverly, and I quickly wanted to show you how to calculate the interest on your Small Business Act loan. During this time, a lot of people apply for a Small Business Act loan or PPE loan, but I think a lot of people are confused on how the interest is calculated and how, yes, you are getting a loan at probably what seems to be a low interest rate, but when you don't understand how interest is calculated with these government loans, it can get you in a lot of trouble. As I've mentioned before, I'm an accountant, but I also do some accounting services for individuals and small businesses on the side. And one of my clients, she's starting up a business and she applied for a Small Business Act loan. When I actually prepared her interest schedule, she didn't realize that with the minimum payment that they had on the schedule, that she wouldn't be finished paying off this loan until 27 years later. And most people don't, especially for a business loan, a lot of people do not want to hold it for that long. So I'm here to show you how the interest payments work, and that when you do get these loans, and it does seem like a low interest rate, definitely do not want to pay just the minimum payment that they set up for you, because a lot of it will have you paying this loan off for years and years to come. And also how much, when you receive these loans, how much of your payment is going towards the principal and how much of your payment is going towards the interest. So what I have right here is my SBA Loan Calculator that kind of breaks down how to differentiate between the loan, the interest, and the minimum payment. Also how a lot of these loans are set up. So I want to give an example. Say you want to start a business and the loan agreement is for $25,000 principal. So this is what you borrow from the bank. And they say you have a 4% interest. So 4% interest. It doesn't seem that bad, right? And when you think about it, a lot of people think, oh, in total from this loan, they're going to pay $25,000 times 4%, which is just $100 in interest, which is wrong, completely wrong. How interest payments work, whether it be for a loan or a credit card, is that usually they give you an annualized interest rate. With credit cards, it's usually higher. With loans, it's typically lower, because it's usually, when you're having a loan, it's usually a higher amount. So if they give you an interest rate of 4%, that is an annual interest rate, but you have to take that interest rate and divide it by 12 to get your monthly interest rate, because they won't charge you annually, they'll charge you monthly. Same thing with the credit card. And that's why I always preach, pay your credit card off in full each and every month, because you don't realize how much interest eats at you. Say if you have a $5,000 credit card and you have a $3,000 balance on there, and you're trying to pay it off, you're slowly trying to pay it off, and you're paying their minimum payment. But also, if you have a $3,000 balance, if you take $3,000 and you times that by, usually credit card interest rates are pretty high. So if you take that times by, say, 20%, that's $600. Now take that's $600 worth of interest annually. Now take that and divide it by 12, and that's $50 that they're gonna add to your monthly bill because you did not pay off the balance. And that's why a lot of people cannot pay off their balances, because they are accruing interest while only paying off the minimum balance. And that's how a lot of these credit card companies keep people poor or making them pay more, because they tack on interest, but they only give you a minimum payment that is way below, that sufficiently won't let you catch up to pay the interest payment in time. This example right here is similar to the loan agreement that my client had. Let's say you have a $25,000 loan. They give you 4% annual interest rate payment, but then they tell you the minimum payment that you have to pay is $200 a month. And for the date example, let's say you get this loan on November 1st, you pay $25,000. This is your payment, your interest, your balance is $25,000. Now, with the minimum payment, you're thinking, okay, let me just pay the minimum payment. So you pay $200. Then the first thing they will calculate first is the interest. Out of that $200 payment, $83 is going towards your interest. And that is that 4%. If you can follow me with this calculation, that is that 4% times the 25,000 divided by 12. That is basically towards your interest, and the remaining of your payment goes down to paying your principal. And this is your balance later. But note that when you are paying, and your balance is only going down by your principal, it's not going down by the $200 payment. So you may think your balance should be $24,800, but in fact, because they don't deduct the interest, it's actually $24,883. And that's kind of how they get you. When they're reducing the balance, they're reducing it by the principal. They're not including the interest, but they pay the interest first. And again, the next month, you pay another $200 minimum payment. The interest is calculated by the balance. So now we're going into this next balance times that annual rate divided by 12. And the remaining payment goes towards reducing your principal, and that goes towards your balance, not the interest. Now, this is basically, so if you followed the minimum rules by the Small Business Act loan agreement, this is essentially how they are setting you up. And I would like to say setting you up for failure. So we're gonna go down, it's 2021, we're still going down 2022. Let's continue to go down and see how paying this minimum payment is gonna end you up. Look, it's 2030, we still got $8,000, $7,000 left on this loan. And we're gonna scroll all the way down to the very end when we finally pay off the balance. But look, when we finally pay off the balance, it would be May 1st of 2034. That would be 14 years later that we would pay off this loan with the way the agreement is set up with the Small Business Act. And as you can see, the balance is paid off. Our principal, what we agreed on, but we paid $7,393 in interest. As you see, with all the payments that we paid technically for that $25,000 loan, we paid $32,000. And we're paying this off over 14 years. And if you look, we paid 162 payments to pay this off. Now, this is just if you pay the minimum payment. And having a calculation like this shows why it's important to pay more than the minimum payment when it comes to your loans and credit cards, because once you have to realize that after a while, it takes a lot to pay down the balance of your principal, because it's always first going to interest payments. So I just wanted to highlight this for you really quick, because I think a lot of people are confused when it comes to these loans. Now these loans some of the Small Business Act loans are very easy to get, but I think a lot of people are confused on how to calculate it. So that's why I did want to show you this breakdown, so that if you do decide to get a Small Business Act loan, that you do know how to calculate your interest payments, so that you're not bamboozled by the terms of the agreement. And also for your personal credit cards, this also applies too. So if you do have an outstanding balance on your credit card, you can also see how much the interest is going to be charged. Usually in the terms and agreement of your credit card payment, just look at what the APR, the annual percentage rate is, and divide that by 12 and to multiply that by your balance to get your interest payment that's going to be charged to you for the month. And so that's all I had to show you. I hope this helps. I don't think loans are bad. I just think, especially if you have a plan for them, but definitely you can use a tool like this to calculate your interest payments and how long do you want to pay off this loan. If you want to pay it quickly, then you definitely have to pay more than the minimum balance. And also you can calculate a number high enough to make sure that you pay off this loan in a time frame that's acceptable to you. So I hope you enjoyed it. Definitely, if you have any questions, comment below and I'll respond. Also in the bio below, my business email is down there too. So I hope this helps you out.